Hello and welcome to another episode. Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Wednesday afternoon. I hope you all had a great week so far. As always, before we jump into the markets and my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream/video is my personal opinion and in no way a financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all, oops, there my bookmark cat flew out, are all linked in the video description down below. And the one thing I really recommend, if you haven't done so, is actually go and check out the Elliott Wave Principle. So that wonderful book here, you can read that book online for free when you use the link that's down in the description below. And you can also use the same link to get yourself a physical copy. With that said, let's jump directly into my portfolio. Magic button. And we can see that today we have, again, another slightly break-even start into the day. Today with a slightly red touch. So our portfolio is unchanged. I'm going to jump into it in a second. As you can see, we still hold our 600 shares of GameStop. We still have 6 covered calls sold against those. And outside of that, there is not much to mention. So nothing changed with our portfolio. And since nothing changed, we can jump directly into the markets. As far as GameStop goes, we're gonna look closer. So it's our biggest position. If you're curious about the overall pattern, where I think it's going and so on, I would recommend that you check out yesterday's episode of Daily Market Mastery, since we worked through it yesterday in a little bit more detail. For today, I just want to look on the hourly chart and basically quickly check what we're retracing here. So if we already have a clear retracement level or not. Actually, let's first check how much we retraced here. Okay, we hit through the 61.8. So the big question, or I mean, what I want to cover or what I want to include today is, if we look on the hourly chart, this could be a 3-wave move. So A, B, C as part of the correction, and we'll get another 5-wave move further down. I mentioned yesterday what that would mean. And the other option would be that this is the impulse that's starting wave 5. So assuming that wave 4 ended down here and that we're now in wave 5. If we were to break the low that we had here at 25.60, we probably would have confirmation more of one kind or the other that potentially will get a little bit more downside first. Otherwise, we can still live under the assumption that this is going to be in some form 1, 2, 3, 4, 5, or 1, 2, 3 not finished, 4, 5, and so on. Yeah. Circling back here to the 8-hour chart, and still 50 seconds before the markets open, then we're going to check options premiums and if there is any benefit or if it's worth considering rolling our current existing 37 strike calls that expire March 28 further out, so to potentially earn additional premium or not. In the meantime, we can jump into Barnes & Noble Education Inc., where if the chart gets to load, which is really weird. It's an issue that I've been having that I have had no time yet to look into, unfortunately. Like what happens with, or what's going on basically with Motive Wave for not fetching the charts that should be clearly available. So we have updated data. We have no issues with our connection in Interactive Broker. So it's a little bit weird. Yeah, let's remove the ticker and edit again. So actually, let's then jump first to another ticker. And then as said, edit again up at here, BNet. So that's what we currently have in the portfolio, search, and there we go. And now let's open the ticker again. And let's give it a minute. Market's open, so we can in the meantime check for GameStop. As said, we have currently the March 28 call, so we need the weekly ones. March 28, $37. It's not very popular or very common strike price, but it was what made sense back then. So if we were to buy them back and instead roll them out to 44 days, which would then be those here, we would currently have to, we currently don't have a quote for that because there's no volume on our 37 calls, which makes it a little bit harder. If we go with the ask, it would be a debit. Yeah, that's a little tricky, so we'll have to wait to see if we get a quote here, so somebody bidding on that contract. We can see that here we would have a bid of 160. Then, however, although that doesn't mean that it will trigger for that, although there's also quite some volume on the $30. So the 29 are in comparison cheap if we go by the bid. Yeah, so the mid price might still even out. Either way, we need some volume here, so we actually get a mid price, so we know could we roll them for credit or not. Obviously, doesn't help us if we switch here because because the problem is that our existing ones don't have any huge open interest, and therefore we don't get any quotes here. So we'll just have to wait and check back later. Chart for Barnes & Noble is unfortunately not loading. I don't know what I can do here. So open chart window. There it's loading. Interesting, yeah. So daily. And if I switch to 12 hours, might have to open a ticket with Motive Wave. They're quite responsive with their tickets, but yeah, it also takes time to basically gather the data, screenshots and whatnot. And not sure. I mean, I might do it on the weekend, so if I don't have other things that keep me occupied during that time. Yeah, it looks like the 12-hour chart here is the problem right now, and lower time frames, because the daily chart was loading in a second. If we close that, close, and switch here to daily, then the change doesn't apply, which is the problem because the chart is not loading. We cannot change the selected time frame. Tricky, yeah. So if we, yeah, like just for now, open chart window so we can see on the daily chart. If we zoom out a little bit or make it a little bit bigger and then actually zoom in a little bit, we can see that we're basically still bullish, still assume that we get the upward movement here. Interestingly enough, the new chart window also contains our position again, whereas the previous one stopped to show them. Yeah, I don't want to relabel everything, so that's a little bit of a bummer. So we have a clear 5-wave impulse up, we have a 3-way corrective move, and we have what appears to be a 5-wave diagonal move, followed by a corrective move, and we should potentially be here in the next upward move, which would be confirmed if we now get some stronger movement up here. Yeah, we hold our position. We only would abandon it or consider abandoning it if we break 831 to the bottom. So yes, want to close that chart. Moving on, for now, immersion, we're waiting for the correction to finish, so we still expect further downward movement before we go further up. Cost, we're not sure what's going on here in this area, the whole move. I have to say, like in retrospect, now seeing the bigger picture again, wasn't the smartest entry, but our position is relative small, so we'll just hold it. Worst case, we're looking at an, I don't know, let's say $800 or $600 loss, where if we reach the point where we have to abandon the position. So far we're still good. NEO, yeah, so we wait. We actually, I called this one wrong twice, have to admit that and be straight up about it. But basically, now we are waiting for a final move up. We would consider leaving the position if we break 363 to the bottom. Otherwise, we assume that we have 5 waves up, a corrective wave, and should now get our next upwards move here. Against the NEO, the 100 shares that we hold here, so it's also not a big position. We also have a covered call sold at the $7 strike price because our target area would be at least there. So if that were to happen till April, we would be happy to have our shares called away. Let's look at the expiration here. April 17th is still 57 days out. So we are far away from rolling those. Again, if we get them called away, we're still happy about our trade. So if this plays out like this, otherwise we'll see if they expire worthless, if we consider rolling, and so on. Yeah. Circling back now, unfortunately, that we moved our GameStop calculations. Again, if we buy those back and roll them out for 1 week, so sell those, we still don't have volume on our March 38th, so we'll have to wait a little bit more. And yeah, moving on. We skipped the crypto part. There's a lot to relabel, which we will not get to do today. And we jump into one thing I wanted to look into was Frontline, so which also hasn't been loading. So we're also gonna do the same and say open chart window, and maybe we get a chart here. Although here we're on the weekly chart and not getting data, and that I doubt the daily chart will make any much difference. But let's wait and see. And in the meantime, I'll have a sip. I have to say, obviously, while we had a strong second half 2024, where ever since I switched to Interactive Broker in the middle of May 2024, I achieved 103% return or so in the portfolio, which is obviously incredible and probably not a recurring pattern or sustainable or replicatable or whatever. In comparison to that, obviously our start into 25 has been slow. So we already almost passed the first 2 months of the year, and we're actually looking at a small loss in comparison, mostly because obviously we have a very, very big exposure to GameStop. And towards the end of the year, we wrote covered calls that were with a January expiration date. And then in January, I got cold feet, stopped believing in my own assessment, and rolled them for a debit instead of letting them expire. So we missed out on a $2,000 or so, or $3,000, so a decent 10-15% return. And now we just have to basically live with that mistake and move on from that. I still am comfortable that we will beat the markets this year as well. With the exception of a period where I was trading the Nasdaq with 20 times leverage, which obviously is more or closer to gambling than to trading or investing. I've been beating the markets ever since I started trading continuously or in one go when was it? May 2020. And my worst year again, if especially, so obviously if we look at the whole history, I had a negative year last year, but if we exclude specifically the 20 times leverage gambling transactions, more or less, my worst performance was around 29.80% in 2020, and all years since that were actually better. Yeah, so it looks like frontline chart doesn't want to load, not even this way. So I thought we might have a workaround for our issue, but we don't. Do we get a Lulu chart to load? That one we got yesterday already. Yeah, so there we are expecting potentially a set correction as we covered yesterday. NVIDIA, yeah, I said should be more upside, but check out yesterday's episode for more details. Keep the potential channel here inside. And the one thing that might be interesting to look at would be Amazon, where actually back in November, I pointed out, so back here, I pointed out that the target area would be 250 to 344, and we're almost fully there yet. So out of that 20-something% return that I, in quotes, predicted back in November, 10-point-something% already got realized or got reached. Yeah, so we're obviously not fully there yet, and yeah, but I still believe there's more upside. So visually, I see a 1, 2, 3, 4, and 5, and the 5 should have another push. If you want to know for sure, you should focus on the area since July 24 and see if you can label full 5 waves here already, or if it's only 1, 2, 3, 4, and 5 not finished yet. Yeah, so it is possible sometimes that we obviously fall short of our target area, so keep that in mind. But yeah, like, so overall, it's one of the scenarios or one of the labelings where I've been right. And yeah, that said, do we already have a volume for our, no, there's still no volume for the $37 calls. Interesting, to be honest, we can see that there is open interest, obviously, at most of the price levels. Oh, sorry, there's no volume in that area, 37 to 39. So we will not get a quote right now. Probably serves as a lesson learned to in the future pick more popular strike prices, so 40, 35, and so on. But at the time, it made more sense to roll to 37, so roll down and out a little bit to increase the premium that we earned. Yeah, so yeah, I think since we don't get the other charts that we would like to look at to load right now, we're actually going to call it a day here. There's not much more to cover. Again, biggest position GameStop. I'm still bullish. There is theoretically the possibility that we retrace to the 2273 area here first. So as a big A, B, and C move. But visually, it almost looks as if we finished our wave 4 here and are now on our way in our wave 5. So it doesn't mean that temporarily there's not a little bit more downside, but I would only start to consider the option of a bigger corrective pattern if or when we break the 2560 here. Until we don't break that, I move forward under the assumption that wave 4 terminated here and that we're now in wave 5. Anyway, so that's it for today. Thanks for stopping by. I hope you were able to take something away from today's episode. Make sure or try to join next time live so you can, if you have specific questions, ask them during the stream. And with that, I'm going to wish you all a pleasant rest of the day and then see you all tomorrow with another episode of Daily Market Mastery or in one of my other streams on my main YouTube channel. So yeah, have a great rest of the day. See you then. Till then. Bye-bye.